Welcome back to the 6th episode of the 10K Portfolio Challenge, where I intend to grow a 10K portfolio to 20K in 1 year. In this episode, we'll cover the recent articles and deals on IREN, such as the partnership with NVIDIA, the acquisition of Mirantis, and the partnership with B Networks using Verity, and of course, our usual technical analysis on IREN. First, let's start with the technical analysis on IREN. From the last update, IREN has firmly broken out of the bullish pennant back in April, came back to retest the top of the pennant in late April, and has proceeded to continue to climb in a very basic and most bullish zigzag uptrend, forming higher highs and higher lows. Volume has also picked up, which is a very good sign that the rally is supported by strong buying volumes. The next step or target to look at is probably whether it can hold on to this 63 or lower $60 line, and if it can break up and out from here. And the next level would probably be the previous all-time high at 75 to 78 level. Now the one thing that we want to see is that it floats between the higher Bollinger Band and it just continues to climb like what we saw back in August last year to October last year, where IREN went up 300% in 2 months without ever touching the middle Bollinger Bands. Now that we are done with the technical part of IREN, let's take a look at some IREN news and deals and what I think about it. First up is the Mirantis Acquisition. But before we go into the Mirantis Acquisition, there's a piece by Daniel Roberts, the co-CEO of IREN and practically your daddy if you're an IREN investor, just like Elon Musk is to Tesla investors. In the article on X published recently on IREN thesis, IREN's strategy is to build on 3 layers. Layer 1, the physical infrastructure. Power, land, substation, data centers, and cooling, the foundation that everything sits on. And layer 2, the compute infrastructure. This is the level where all your GPUs and CPUs from NVIDIA fits. And layer 3, the software and operational capability layer. The orchestration, deployment tooling, and enterprise expertise that makes the first 2 layers work harder for customers and opens the door to a broader, higher value market over time. Layers 1 and 2 are where the overwhelming majority of IREN's value is being created today. And layer 3 is where the advantage compounds further over time, but only because layers 1 and 2 are built, owned, and controlled at scale by IREN. IREN has been building layer 1 for 8 years, and with Mirantis, they have taken the first deliberate step towards layer 3. So what exactly is Mirantis? Let's listen to the CTO of Mirantis.
Mirantis is very much focused on this idea of bringing in a software layer to provide for all of these capabilities we're talking about. We believe in a turnkey AI cloud experience. We believe that we have a software solution that provides for a full stack of capabilities. Ultimately, our focus is self-service customer APIs that can provide you multi-tenanted infrastructure with an automated lifecycle management and real-time observability, allowing you to rapidly monetize the investment in GPU infrastructure, as well as move and change with the times. I'll come back to that point. This is a constantly evolving space. We're accelerating that evolution. We need tools to help us manage that space. Our product is Cordant AI. It provides what we like to think of as GPU cloud in a box, rapid multi-tenanted GPU clouds, full stack automation from the network layer up, full data center automation, consistent and secure operations taking into account all of those governance rules and requirements.
And what can Mirantis actually bring to the table?
One of the kind of unique things about Mirantis is that we have a broad set of capabilities because we've been servicing the infrastructure market for some time. We not only have the product, but we actually have an in-team security or in-house security team. And that's not something that's just like, oh, hey, we have SOC 2 or something like this. We've actually worked with enterprise customers to develop FedRAMP environments to basically check off those particular requirements for them. In some cases, we've helped to actually run those particular environments. So this is something that like a lot of people in this space just aren't set up to do. From a managed services perspective, again, people make these large investments. They don't necessarily know when the investment's going to arrive, the chips and things like this. They may need help actually running those particular environments until they can actually train and onboard staff and get that expertise in-house. We can help bridge that. And then for smaller projects and things like that, if somebody wants us to sort of solve a particular scaling problem or run something for a certain period of time or develop a custom piece of software, we actually have a whole professional services team in-house, the global team that we service the world with. And that, again, is sort of like a unique capability that only Mirantis has.
In my opinion, Mirantis is like the Palantir for IREN. It is the software stack that will allow IREN to provide a multi-tenant environment and it will close the skill gap for IREN massively. To become a vertically integrated cloud or compute provider, Mirantis was the final piece to the puzzle. After securing power and land in Layer 1 and buying the physical hardware, GPUs from NVIDIA and Dell in Layer 2, IREN needs a software layer in Layer 3 to optimize GPU usage, have a line of sight, and optimize the efficiency of the GPU fleets. Cordon AI from Mirantis is a turnkey platform to bring IREN from metal to model. Mirantis will allow IREN to operationalize the GPU infrastructure as quickly as possible and monetize, which is what IREN exactly needs, to onboard new and multi-talented customers, which fits into IREN's strategy of being the next cloud and also gaining access to over 1,500 existing customers of Mirantis. It will allow hyperscaler experience even when using IREN Cloud. It was also probably more expensive for IREN to build a team of software engineers to create a software layer, and it will be too slow to market. Therefore, buying Mirantis, a $625 million deal, was probably the faster and cheaper way to go. Just buy the domain expert, reduce stranded GPU resources, and get the revenue going as fast as possible. And while doing up this video, IREN just announced an 800 MW data center campus in South Australia. And the second most interesting update will be the NVIDIA and IREN strategic partnership to deploy up to 5 GW of NVIDIA DSX aligned AI infrastructure across IREN's global data center pipeline. As part of the partnership, IREN has issued to NVIDIA a 5-year right to purchase up to 30 million shares of ordinary stock at a price of $70 per share, which gives NVIDIA the right to invest up to $2.1 billion in IREN. In my opinion, this effectively gives a floor of $70 to IREN shares, because if you think about it, NVIDIA is the mastermind in controlling and steering the arc of AI. If Jensen Huang is willing to buy IREN at $70, I believe nobody would dare to say that Jensen Huang is a stupid investor. It will essentially give IREN a $70 floor anchor to IREN's share price. Next, to connect the dots and understand how important the strategic partnership is, we'll have to go through some of the pointers that Jensen Huang went through during the recent NVIDIA GTC Taipei. But firstly, let's understand from Jensen Huang on why compute is important now.
And so, the first thing is useful AI has arrived. Now, what does that mean from the industry's perspective? From the industry's perspective, that means that tokens are now in extraordinary demand. Because if you could do this, you're going to want to produce more of it. And because tokens are now profitable units. Tokens are now profitable units of revenues. Because it is now profitable, the AI companies want to build a lot more tokens, generate a lot more tokens, build more AI factories, which is the reason why compute demand here in Taiwan has skyrocketed. It is precisely the reason why all of you are so busy and your businesses are doing so well. In fact, that looks like some of your stock price.
Tokens are essentially like toll fees that you have to pay to AI factories like IREN, Nebius, or CoreWeave to allow access to use the road, or in this case, to use the service. If you are driving a big car passing through a toll gate, you have to pay more toll fee, which in the AI world means you have to pay or use a larger sum of token. If I want to submit or receive a very large prompt from Claude or GPT, I will need to pay a very large toll fee or large amounts of token. And as more and more people adopt AI, more and more useful AIs get created, more and more agentic workloads appear, more and more tokens are needed, and therefore more compute is needed. Next, we need to understand why these AI factories producing the compute or the tokens must work the first time.
Because NVIDIA ultimately is not just building a GPU, not just building a system, we're helping customers build these AI factories, these AI infrastructure that is so immensely complex. Each one of these at 1 gigawatt level started at $30 billion. It is at $50-60 billion, and soon it will be $100 billion per gigawatt. $100 billion into an AI factory. It must work the first time, and it must work right away. The cost of capital is incredible. The complexity is incredible.
From the words of Jensen Huang, each gigawatt used to cost 20 to 30 billion. Now, they cost 50 to 60 billion, and soon, at 100 billion, it must work from the get-go. Therefore, there needs to be a place where cloud developers are able to test out their systems, their infrastructure, their connectivity before actually touching the soil. And this brings us to DSX, and the collaboration between NVIDIA and IREN. So what exactly is DSX?
The world is racing to build AI factories, the largest infrastructure build-out in human history.
AI factories are incredibly complex. Every layer, chip, rack, network, power, cooling, grid, must be designed together from end to end because compute is revenues. NVIDIA DSX is the blueprint, a reference design for building and operating AI factories at maximum efficiency and profitability. It starts with DSX Sim. With the DSX Sim Omniverse blueprint, partners design and validate an NVIDIA Vera Rubin AI factory before a single rack lands. They plan the layout, simulate the power and cooling, design the network, validate every integration, test every change in the digital twin. The factory powers on. DSX OS takes over and provisions, operates, monitors, and remediates the infrastructure, turning the installed systems into trusted, multi-tenant, resilient, AI-ready capacity. Today's AI factories over-provision power by up to 40%. DSX Max LPS lets operators safely deploy more GPUs inside the same power budget, adding billions in annual revenue. Breakthrough hot liquid cooling at 45 degrees Celsius uses less water and energy. More power going to revenue-generating compute. Incredible. Dynamic power allocation steers power from rack to rack, recovering stranded watts, sending them where work is happening. In-rack power smoothing flattens peak current spikes and power surges. Throughout the factory, teams of AI agents work with DSX Max LPS, continuously coordinating to balance cooling and power to meet workload demand. DSX AI factories are flexible energy assets that operate cooperatively with the grid. DSX Flex reads real-time grid signals and dynamically adjusts factory power when the grid needs relief. 100 gigawatts of AI factories will come online before the end of the decade. NVIDIA DSX AI factories run at highest efficiency, produce the lowest cost tokens, and make the grid stronger. So as you see, we used to design a chip inside a computer. And then we simulated a system inside a computer. Today, you saw just now, everything was built in Omniverse. I've been working with Omniverse with all of you for a long time. This was the dream come true, so that we can build these gigantic systems as large as the world wants to build, inside a digital framework, inside a digital simulator, in a digital world, long before we build the first break ground and put our money to work. So this is our ecosystem, we call it DSX. RTX is for our GPU, DGX is for our systems, and now DSX, basically infrastructure.
NVIDIA DSX AI gives infrastructure teams like IREN the ability to simulate complex environments in advance, which includes compute, networking, storage, orchestration, and security layers. It allows IREN to test these multi-billion, multi-gigawatt sites before physical building, to maximize tokens, ensure cooling and piping systems work, with the ultimate goal to maximize token output per watt. DSX allows IREN to build on an Omniverse or a digital simulator first, before building or breaking ground, which is also why IREN collaborated with BE Networks to simulate Blackwell Ultra AI Cloud. Using NVIDIA DSX Air and Verity, they will test topologies, workflows, and operations before deploying the 50,000 plus GPUs. This will help IREN translate validated designs into repeatable deployment workflows across day 0 design, day 1 turn up, and day 2 operations. To me, the keyword here is repeatability. You do it once, take the layout and experience, and go to other sites and start minting factories. Exact design, exact everything, copy and pasting it everywhere like a factory. Separately, IREN also signed a 5-year $3.4 billion AI cloud contract with NVIDIA for Blackwell GPU deployments across 60 MW of gross data center capacity at its Childress campus. To me, this small little 60 MW is just a start, a trial to use the DXS layout. Once validation is confirmed, IREN will start printing and minting compute at the flagship 2 GW Sweetwater. And NVIDIA will use Sweetwater to prove to the world of its DXX platform, its lowest cost per token, and continue to expand its foothold and monopoly on the GPU and CPU market. Next, we also need to understand what are the benefits of using the DSX platform.
Compute is profit. The absence of revenues and profit is loss. And so it's really important to realize that this is an example of an AI infrastructure coming online. It could be coming online quickly. It could take a while. Its throughput could be high. It could be low. Its resilience and reliability could be good or bad. And its lifetime of usefulness could be long or short. Because this represents 50, 60, going to $100 billion. This curve matters greatly, which is the reason why NVIDIA is such a great partner. Working with us because of our fully integrated capability, we didn't just come up with a PowerPoint slide. We created the entire infrastructure. We connected everything together. We built out billions and billions of it ourselves to make sure that everything works well. As a result of that, our time to first token, our time to first inference, our time to training turned on is much faster. Second, because our throughput per watt, our tokens per watt is utterly world-class. And the reason for that is because we integrate everything, we design everything from the ground up, we simulate the entire system, and we use extreme co-design. Just like I showed you just now with the Vera Rubin rack, everything was designed in order to deliver on this incredible throughput. If your data center, if your factory has 1 gigawatt, it will not have more. 1 gigawatt means 1 gigawatt. That's all the power generation you could do. If you have 1 gigawatt of power, then throughput per watt is revenues, because every token is profitable. Every token is revenues. This is the future. Compute is revenues. Performance per watt is your revenues. Choosing the wrong architecture just because the chips are cheaper doesn't translate, doesn't make sense. You need to make sure that your revenues per watt, the more you buy, the more you make. Third is reliability. If you ever get a chance to see these data centers, there are so many moving parts, millions of cables. The ability for all of those computers to work harmoniously, reliably, is extremely low. It is just extremely difficult. We have now been operating very large scale for a very long time. That experience matters. That difference, mean time between interrupts, extremely important. And then lastly, this is very hard. The lifetime of these systems, the software is changing all the time. 4 years ago, which is in the time of Hopper, AI has completely changed. 6 years ago, this is the time frame of Ampere, AI has completely changed. We started out talking about CNNs. Here we are, then we talked about transformers, and then we talked about mixture of experts. Now we're talking about agentic systems. Every single generation, every single few months, the software industry is coming up with new technology. If your architecture is not flexible, if your ecosystem is not rich, then this curve cannot be long. You cannot predict how long your system can last. I can. NVIDIA systems is all over the world. Software developers start with NVIDIA CUDA. And by definition, therefore, the life, the ecosystem, the useful asset is going to be much longer. The difference is essentially cost. You could think of it as revenues, but the other side of revenues is cost. If the life of the asset is long, the TCO is low. This is the difference. This is what it looks like when compute. The more you buy, the more you make.
From what Jensen said, if compute equals to revenue, using the DSX platform allows the TTFT, or time to first token, to be reduced, because you do all the simulations on software first, which is cheap, before the actual execution. Everything is pre-rehearsed instead of having all the manpower and GPU sitting idle. Second, because everything is co-designed and built from the ground up, tokens per watt can be increased and maximized. 1 gigawatt is 1 gigawatt. It is pure math, and squeezing in the most amount of tokens in a limited resource is key. This will allow IREN to run a highly efficient data center, allowing for maximum margins. Third, the mean time between interruptions, or MTBI, will be high, meaning IREN will be able to meet the SLA's uptime agreements, allowing IREN to have more customers and improving its reputation. And lastly, as Jensen mentioned, it allows for the increase in useful life of data centers. Building data centers and acquiring GPUs or CPUs is not cheap. To start earning money, you need to pay off your capex first. Once you pay off your capex, essentially how long there is left for your data center, and GPUs or CPUs are essentially margins and free money. Therefore, if what Jensen said is really true and IREN data centers are able to last 6, 7, 8 or even 10 years, IREN will start minting beyond the 3 years payback period. When you start connecting these dots, the conclusion is that IREN is no longer just a volatile miner buying expensive graphic cards. They are building a vertically integrated AI infrastructure monopoly. IREN has been successful in building layer 1 of securing land and power, and layer 2 in buying GPUs and CPUs. Now, IREN has taken a step in layer 3, and Mirantis will act as IREN's Palantir. And when a single gigawatt costs up to 100 billion to build, you cannot afford a single mistake on day 0. This is where NVIDIA's DSX Air and BE networks come in. By building first on digital twins to simulate complex networking, cooling, and security layers before breaking ground, IREN secures the ultimate advantage of repeatability. I believe that the 3.4 billion 60 megawatt contract with NVIDIA at Childress is just a validation trial. Once the DSX layout has been proven, IREN will start minting compute at their flagship 2 gigawatt Sweetwater campus. NVIDIA isn't just using IREN as a landlord, they are using them to prove their DSX platform to deliver the lowest cost per token in existence. But what do you guys think? Is Mirantis the final puzzle piece, or is the market still pricing IREN like a crypto miner? Let me know in the comments below, hit that subscribe, and I'll see you on the next video.